Hello and welcome. We're here at Holistic Investments, and I'm your host, Konstantin Kogan. And today I'm honored to be joined by Meltem Demirors, who is a Chief Strategy Officer at CoinShares. Hi, Meltem.
Hi, how are you, Konstantin?
Amazing. New York morning. We're both in New York. It's fun. You know,
It's sunny.
It is.
It's a sunny day. I'm so happy.
So yeah, it's very grateful for this, and for someone who doesn't know what CoinShares Group does, it is a pioneer in digital asset investing. They have over $1 billion in assets under management. They have offices in Jersey, New York, Stockholm, and London, if I'm not mistaken. And yeah, so Meltem is so well-spoken person and such a brilliant mind. So I'm really excited about this interview. And traditionally, before we go into any deep dive conversations, I have to write a disclaimer. So this content is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or any other advice. So now we can talk about anything. So latest news, Meltem, I've heard your interviews in Bloomberg, CNBC, and we've seen incredible surge in Bitcoin prices, as we call institutional adoption, whatever that means. So let's just talk about it. How do you view the current state of things, and what do you foresee for 2021?
So I think one thing that might be helpful is let's just revisit where we've been. So just to provide a bit of context, I personally started engaging with Bitcoin in late 2012, early 2013. And then in early 2015, I decided to take a leap and move my career from the energy industry, the oil and gas industry, over into the Bitcoin industry. At that point in time, Bitcoin was really the only asset. Its market cap was still under $1 billion. It was a very tiny industry. And in the 6 years since then, it's grown a lot. I've invested in over 250 companies, have built 2 large asset management firms that between them now manage close to $15 billion in assets. So it's been a ride. There's been a lot that's happened, but I want to sort of go back to an analogy that I use often that I think is really helpful and illustrative. So if we think back to how the rally felt last time, right? 2017 was my second bull market. But, in 2015, when I first started, nobody really wanted to talk about Bitcoin. Then in 2017, we went through this boom and bust cycle, and it really felt kind of like what I imagined 2001 must have felt like. I was not there. I wasn't trading at that time. But in 2001, right, investors investing in internet stocks, they didn't really know the difference between pets.com or Amazon.com.
Oh, yeah.
And by the way, in 2001, Amazon.com stock price crashed. It took 7 years to recover, right? These cycles are not unusual. So what's been interesting to see is we went through this boom and bust cycle in the cryptocurrency space, but it hasn't taken 7 years. It took 2 years for Bitcoin to recover from its all-time highs. And what's been interesting to observe is how much the narrative has shifted. The other thing that I think is very interesting to talk about is the macro context for this. And when we say macro, I think a lot of times when people talk about macro, they talk about macroeconomics, but I think macro really encompasses a variety of different trends and data points. And we talk about this in our crypto trends report that we issue every year. Later this month, we'll be issuing our 2020 crypto trends report. So quick shout out if anyone wants to see that, coinshares.com. We have tons of great research there. But in our reports, what we look at is not only economic trends, but demographic trends and social trends, cultural trends, and also technology trends, because together these sort of create the environment in which, we define what is and isn't possible. And if we think about Bitcoin, the door to crypto really was opened in 2008. If we recall, Satoshi, whoever they were, the way they brought Bitcoin into the world was with a very bold proclamation, Chancellor on brink of second bailout for banks. And the expectation, I think, in 2008, I recall 2008 and 2009 because I thought I was going to be an investment banker, and that did not happen because the firms I was going to work at didn't exist, right? They evaporated overnight. But I think, 2008, we thought, okay, we're going to unwind QE. Nobody foresaw that we would have treble the amount of QE 12 years later. And so because of COVID, Bitcoin has entered, in my view, a new era. It's driven by this narrative of inflation-resistant investment, and we can talk about that some more. It's been driven by 10 years of digitization compressed into a time span of 6 months. And it's also driven by psychology. And there are two important components to psychology. One is investor psychology. People used to be spooked by Bitcoin's volatility, but Bitcoin's volatility has consistently dropped while other assets have become far more volatile. So from a mental model perspective, Bitcoin no longer feels as scary. It actually feels quite approachable because the volatility is not as extreme. And then the second piece that I think is really interesting is as people look at the world, right, from a mindset perspective, people see the world is changing. There is a new reality that's being created. And the way I like to think of it is we're at the end of one era and we're beginning a new era. And I think in this new era, Bitcoin has really captured people's hearts and minds. And as we know, the most important battle is the battle for hearts and minds. And you see this. Every macro investor, every major CIO is talking about Bitcoin. Their clients are asking for Bitcoin. And it used to be a career risk to touch Bitcoin. Now it's a career risk to not engage with Bitcoin. Mm-hmm. That is huge. So this has been a breakout year in so many ways, and it goes so far beyond just price action.
So yeah, it's very interesting that like the questions you've touched upon, because of this narrative of adoption. I mean, I've had an interview with Mike McGlone, from Bloomberg Intelligence. He's a brilliant researcher, and his analysis shows that we are at the lowest point, as you mentioned, of the volatility for Bitcoin. It's actually uncorrelated. It's very similar to gold. There is we have major billionaires, like the Millers, the Druckenmeyers of the world, who are joining the game. I've interviewed also with Michael Saylor, who obviously also invested $425 million and from his publicly traded company, MicroStrategy. So, and PayPal CIO endorses it in a way, right? BlackRock CEO and PayPal adoption, right? So then, but at the same time, I'm talking to investors who are still pretty new. So they're this new wave of FOMO, and people they want to invest, and they still sometimes come back to, well, okay, so what's the value behind it? It can drop tomorrow till zero, or not to zero, but it can go down 50 or 100% per annum. And what will you say to guarantee me that it will not go down that much? I own a portfolio of 100 companies. Look at Tesla, how great it is. I'm okay, well, Tesla is also overhyped, so how would you reply to those folks who are still a little bit skeptical?
That's a great question, Konstantin. And this is one that's come up for the last 6 years of my career. Right? Every day, every single day, I have this conversation probably 20 times.
Yeah, I know.
What I always talk about is, look, let's start with the meta, right? And we'll go very high level. And I apologize, I'm going through philosophical phase. It's lasted about 8 years now.
Listen,
so I don't know.
Holistic investment. So,
but look, I think one thing certainly that's been interesting for me, and I think for so many of us in the Bitcoin space, is once you recognize all money is a collective fiction, the idea of Bitcoin doesn't feel so crazy. At its core, Bitcoin is a fascinating experiment in the separation of money and state. Now, just think about that for a moment. We haven't truly had a dominant currency that is separated from state since Julius Caesar stamped his face on gold coins 3 millennia ago as a way to spread the Roman Empire throughout, at the time, what was that empire? So money has always been a collective fiction. It especially became so in 1973, right? When Nixon famously moved away from the gold standard. And the world we've existed in since then is one that is just a fictitious world, right? And if we look at the world around us, I think what so many of my friends who have zero engagement with financial industry, but also people in finance, right? We're looking at things like Tesla. Tesla produces less cars than any other automotive manufacturer, yet their valuation is more than all other automakers combined. Their biggest revenue line item is government subsidies. Tesla is a mechanism to transfer wealth from the government to the pockets of shareholders and corporate owners, right? It is the definition of a corporate socialist sort of society, like this post value driven society we live in, whatever you want to call it, it's wild. But at the same time, I think what Tesla sort of demonstrates and what's happening in public equities is being demonstrated. People are like, why are these companies valued at 1500x PE multiples? And the reality is that the narrative and the belief has become more important than the reality. So all of these things that are happening in our world, people are looking around and saying, well, where's the growth going to be? Target inflation 2 to 2.5%. I have CNBC on. They're talking about how long-term treasuries, 10-year treasuries, and 98 basis points, and they're excited. Yeah. They're like, this is a
and in some countries, they're negative,
Yes, 1/4 of sovereign debt is negative yielding. And people are excited about 90 bips on 10-year treasuries when target inflation is 2.5%. So you're losing 1.5% a year in purchasing power parity. So I think what's so interesting to sort of think about and conceptualize is where are you going to preserve your wealth? That's why we've seen people flocking to gold. The challenge with gold is not easy to move. When you own a gold ETF, there's a lot of other stuff in there that's not just exposure to gold. Getting pure exposure to gold is kind of hard unless you're buying gold bullion. Gold bullion's been in short supply, really difficult to source. I know, because I bought a half a gold bar a while ago, and it was an ordeal. Very interesting experiment if anyone wants to try. But it's really hard for people to figure out where to put money. And so you see people buying real estate, right? Housing price inflation's its highest rate in 40 years in the midst of a global economic recession. Why? People need places to put money. Equities growing at a crazy rate, venture capital growing at a crazy rate, valuations growing at a crazy rate. Again, reality does not dictate what happens in markets. Markets are sentiment machines. And I think the other point I'll just make briefly, and I'd love to hear what you think about this, Constantine.
Sure.
I think that people have this mindset that institutional investors and fund managers and professional allocators, that they are these very principled, hyper-rational people who never get FOMO. And you and I both know that these people get more FOMO than anyone else. And what you're seeing, right, with the participation of retail in the stock market, with things like Davey Day Trader at Barstool Sports, right, who's literally picking Scrabble tiles out of a bag to pick what stocks he would trade, swing trading a couple $1 million a day. You have Bill Miller going on TV and saying, that's not investing. But I think there's been sort of this curtain that's been pulled back. And what we're seeing is FOMO and hype and sentiment. This is what markets are driven on. And this is why narrative and hearts and minds are so important. Again, if we go back to Tesla, I think Tesla is such an interesting company to own, because effectively what Tesla is Elon Musk memeing a company into reality, right? Yeah. And the perception is so much more powerful than the reality. Similar thing, if WeWork would have gotten away with their S1 and their listing, talk about just defying objective reality. So Bitcoin, in the context of the time we live in now, in my view, does not feel far-fetched at all. At all.
Yeah, I actually 100% agree with you, because right now what we're seeing. By the way, I own Tesla stocks. I love Elon Musk. I think it's a great.
You can't not own Tesla.
Yeah.
What is wrong with you? People tell me they're shorting it. I'm like, I'm sorry. Do you have a brain? December 20th is coming. Please, use your brain. Please.
Yeah, I mean, and again, it's all good. I think people there are. I would put it people into several buckets. One who are they're just value investors or whatever. They want to have yield, and they're like doing it on a personal level. Other folks who are like institutional grade, yeah, and they need to allocate capital. Like according to, by the way, World Economic Forum, where you the co-chair like of the Cryptocurrency Council, like they issued, I think last year, their report that there's almost like 1 trillion of unparked money, like, and where do you think this money is going to go, right? I mean, right now there's not many options, as you've mentioned, right? As a store of value, I think Bitcoin is a perfect tool. And if you think about the wealth preservation on the longer horizon, like, I think there are more and more public companies and just institutions who will join the game, and it will be a battle, like, and with, hopping in May and all the bullish trends, I do believe it's going to grow in price. I think it's no brainer.
But I think I actually think one thing is very important. I don't want to just trap Bitcoin in the store of value narrative, because Bitcoin is so much bigger than that. One crazy statistic that I just very quickly want to share, because I think it's mind blowing. Every minute of every day, about $500,000 moves across the world on the Bitcoin network. That's a lot of money. We're talking billions of dollars a day. Yeah. And in fact,
considering that there's no shareholders in the company.
And what's so interesting to me about Bitcoin, particularly, in this multipolar world we now live in, and if some people have not accepted this new reality, we live in a multipolar world, right? And markets are becoming increasingly segregated. And as we move towards this era of digitization, where we're starting to see, like, China's had an explicit firewall for some time now. Now America is talking about an explicit firewall, right? Like, the new battleground, the new ideological frontier is the internet. It's digital, right? Yeah. And digital, it includes physical infrastructure. And we could talk about, what's happening in the semiconductor industry and with data centers and with internet routing protocols and with privacy and encryption. But it's also in applications, it's also in equities, it's in markets, it's in trade balances, it's in flows, right? And so as you look at this multipolar world, right, I'm a child of the internet. I'm in my mid-30s, right? As I look at what the future looks like and what I want it to look like, do I believe that these inept institutions that we have, i.e. our governments, will take care of us? No. Do I want to be left to the whims of mega corporations or new digital oligarchs? Absolutely not. So as I look around me, there really are very few alternatives. And I think what Bitcoin creates is a choice. And so it's very interesting to me to see how that choice and the idea of Bitcoin has translated into all sorts of interesting innovations, utilizing cryptocurrencies directly, open blockchain protocols, new ways of constructing compute and connectivity networks. Like, there is a lot happening that is greater than just store of value.
Yeah, and I want to support this narrative, because I do believe that makes sense. I was just pulling up the easiest way to explain it. But like you, as I feel it, like you're more like a Bitcoin rationalist. Like, you're not maximalist. Like, you're trying to to understand the different perspectives. And I love the one of the interviews you said, like, you're a shitcoin minimalist, which is just hilarious. No, but we're talking about it later. So let's, if you don't mind, like, let's touch, you touch an interesting angle, like, China and this new battle where, like, new countries are digitizing their national currency, right? So we're talking about stablecoins. We're talking about a completely new level of adoption, transparency, interpretability, like an ability to, to even intermittency, like, so can you talk a little bit about that? Because as far as what I've read, like, there's about 16 countries right now who's in the coming year or two is going to issue their, equivalent to digital currency. So what's going to happen next? What is going to change?
Sure. So this is a huge topic, and it's one that I think has been overhyped and underhyped both at the same time. So here's the reality. What countries are trying to figure out, what central banks are trying to figure out, and I'll share a quick anecdote because I think this is such an illustrative anecdote of what I'm about to discuss. In 2018, I was at a dinner, and the head of BIS was there, right? The Bank of International Settlements. And I was obviously, it's a room full of central bankers. And then there's me, the crazy Bitcoin lady. And I actually think that was my role. They were like, that's the Bitcoin lady. She's over there. So there's a group of maybe 5 or 6 of us standing around, having a cocktail. And I was just sort of trying to articulate, Bitcoin's really the separation of state and money. It's a effectively digital nation state that's a commonwealth. It's owned by the people who participate in it, and et cetera. And this gentleman standing there, and he's listening and lets me, go on my little rant. And then he turns to me and he goes, well, you can't make your own currency. That's ridiculous. And I say, but why? He says, you don't have an army. I said, well, yes, we do. It's called crypto Twitter. And then the conversation went on from there. But I think there is sort of this interesting challenge that nation states are grappling with. And here's the challenge. For as long as human history has existed, we have defined identity and nation state collectively by physical borders, right? There are lines on a map that dictate where boundaries begin and end, and jurisdiction for a very long time has defined what economy you participate in, what markets you participate in, and the rules and regulations that pertain to your business, to your financial activities, to your investing activities, the choices you have. Physical jurisdiction has been the basis on which we have created economic activity. In this new world that was introduced 20 years ago with the internet, but has now really been made possible by the advent of Bitcoin, people no longer operate in an environment where they're defined by physical jurisdiction. And you actually see this challenge with data, right? That's why GDPR was enacted. Countries are saying, if you are domiciled in this country, or you have data about citizens who are citizens of my country, their data needs to be domiciled on servers in a location that is physically in my country. And this trend of localization is only going to continue because regulators can't grapple with a world where they can't use physical jurisdiction to define the boundaries where they have control and influence. And what is so wild and mind-blowing is Bitcoin doesn't have a physical jurisdiction. The Bitcoin protocol doesn't have a physical jurisdiction because it's not a company. It's not an entity. There's no CEO. If you wanted to call, it's so funny. People used to ask me, well, who's the CEO of Bitcoin? Like, who do I call? I'm like, that doesn't exist. It's a very new construct because Bitcoin is an idea. It's an open source software project. Even if you wanted to, take down physical Bitcoin infrastructure, let's say you wanted to take down Bitcoin nodes or Bitcoin mining facilities, maybe you could take down some, but there are countries in which, say, for example, the US's authority does not extend, right? So what's been really interesting to observe is, regulators are trying to grapple with this world. They're like, wait a minute. I've been so accustomed to having complete hegemony. Governments have a monopoly on money, right? State and money are intrinsically linked. And governments also have a monopoly on violence, right? And that's through financial censorship. It's through actual censorship of speech, it's censorship of communication, censorship of people's ability to move. And all of a sudden, Bitcoin enters the picture and says, there is nothing here that you can regulate at the network level and the protocol level. You can regulate companies that are domiciled in the jurisdiction that you regulate. And so they're like, the wheels start spinning. And the only thing that regulators know, and by the way, regulators and policymakers in this country in America are on average 20 years older than their constituents. The average age of a sitting senator is 67. They do not understand technology. I apologize. Some of them do. And I've had the privilege of interacting with some really forward-thinking representatives and senators who are trying to push in that direction. Yes, Wyoming, Warren Davidson in Ohio, Congressman McHenry in North Carolina, right? There's some people who are trying to push in that direction. Cynthia Loomis in Wyoming. But by and large, regulators only know one model. And that is control. And there is no control here. So I think central bank digital currencies are an interesting reaction to the rise of Bitcoin. But at the end of the day, the challenge with central bank digital currencies is this. The medium does not change the message. a dollar, whether it's a paper dollar, whether it's a digital dollar, whether it's, some other form, a Fedwire dollar, right? That's already digital, really. Like, just because you change the medium, it does not mean you change the fact that a dollar is a dollar is a dollar. And at the end of the day, any dollar, right, that exists in any system is still subject to the monetary policy and the fiscal policy that's created in the United States. And for the last 40 years, the United States has had a hegemony on exporting inflation through the dollar.
Yeah. I mean, we printed more money like this year than probably in the past like 30, 40 years. So, yeah.
And again, as I look at what's happening, right? This war, this currency war, has been happening for a long time. And the shift towards a multipolar world actually started several years ago. Last year, many people missed this. I'm an oil and gas lover, so I love this stuff. Last year, there were a few important things that happened that sort of paved the way for what's coming now. In October of last year, Rosneft, Russia's largest energy producer, announced that they were no longer going to denominate contracts in dollars. They were only going to use rubles and euros. If we think about the supremacy of the dollar, it was really the result of all petro contracts being denominated in dollars that led to the rise of the dollar as the dominant world currency. And so as the age of the petrodollar comes to an end, there is now sort of an interesting scramble to see what will be the next sort of global hegemonic currency. The challenge is, one, we now operate in a multipolar world, right? The US economy within 5 to 10 years will no longer be the world's largest economy. Number two, the countries that have been subject to US monetary policy, so the hegemony of the US, are looking at the world and they're saying, wait a minute, there's conversations of resurrecting SDRs and maybe issuing digital SDRs. There's talk of potentially creating a currency basket or the equivalent of a Bancor, and issuing that. There's a desire to renegotiate the Buttonwood Agreement, right? Like, all of these things that we've held to be truths for so long are now up for renegotiation. And I think actually what China has done with DCEP is, in a way, brilliant, because by denominating debt, right, in their currency, and by then creating sort of financial infrastructure that is able to cross over into these 140 different countries where China owns debt, owns infrastructure, has commercial relationships, they've laid the groundwork. But I think at the end of the day, a ruble is a ruble is a ruble, a dollar is a dollar is a dollar. And you, as the holder of that asset, right? If I look at my future, do I want to hold a bag full of dollars? Do I want to hold a bag full of renminbi? Or do I want to hold a bag of Bitcoin? And in my view, this is what central banks issuing CBDCs do not understand, right? Is at the end of the day, like, it's not just the medium that matters. It's what's the message? What is it actually? And again, I think choice is so powerful. Now that I have a choice that I've never had before, which is to own Bitcoin, like, that idea is extremely powerful. Bitcoin is an apolitical, non-government owned, like, distributed cryptocurrency. It's internet money, right? Yeah. And so as we look at, like, the advent of this new digital age, I am very enthusiastic about Bitcoin. I invest in companies building with Bitcoin. Like, it is wild. I right now am on a chat app where I charge people 1 Satoshi, right? Every time they message. That's like 1/1000th of a penny.
What's the app, if I may?
It's called Sphinx Chat.
Okay.
Yeah. But there's a ton of really cool stuff that people are doing to enable micropayments. Like, it's mind-blowing how rapidly innovation is happening. It's changing capital markets. It's changing the fabric of the internet. We're seeing the advent of creator-owned, sort of communities where creators can actually monetize, themselves, instead of letting the platform monetize and waiting for a little check every month. Like, it's amazing what is happening, what's being built. And just to go back to the World Economic Forum a bit, I co-chair the Cryptocurrency Council there with Kai Sheffield, who runs the crypto sort of effort at Visa. Visa's been making moves. big moves, right? And so what we're doing later this month is we're putting out a book of use cases, 30 use cases of cryptocurrencies, not blockchain, not central bank digital currencies, not enterprise SaaS, cryptocurrency, open public networks for the transfer and exchange of value, peer-to-peer, right? So we have council members, 30 of them, from all over the world. Every continent is covered. Every sort of use case is covered, from charity and NGOs all the way through to, the world's largest financial institutions. We have members from Goldman and JP Morgan and Deutsche, all the big banks, and everything in between. So I highly recommend, people check that out. There is a lot happening that moves beyond moneyness. It's so exciting. I love it. It's so exciting.
When is the release?
I think it'll be the middle of December.
Okay. So amazing. Yeah. So pretty soon, few weeks probably.
Yeah, but we'll be running that council for a year. So WEF for the longest time was very resistant to cryptocurrencies. They only wanted to do blockchain, which was deeply frustrating for me. But then finally they're like, okay, we're gonna do blockchain, Bitcoin, cryptocurrency council. I was like, yes, this is my moment. So we'll be running that for the next year. We'll be putting out a lot of content. So I'm really excited to actually start to talk about more than just price, because there's so much more that's happening.
Of course.
It's really important to emphasize that. Sorry, I go on these
No, I think it is important, and it's great that you're mentioning it. Like, I'm happy that such reports that actually show people. Again, I don't know how many people read them, to be frank. So that's unfortunate. So I'm happy to promote them. I will read it myself. I will share it with the viewers, because it is important. People spend hundreds of hours of time, of their practical time, not only time, but money also. And there's a lot of investors who subsidize, so to speak, the entrepreneurs, and they provide some real value besides just, send me a Bitcoin, and people still have this myth in their head that, well, maybe it's some kind of fraud, or people are still trading drugs and guns, whatever. But it's that's why I'm very excited about it, to debunk all those myths.
We just need to move beyond price, right? The goal really is how do we explain in very simple language things that are not just price or money or trading. So I'm very excited. I edited all the use cases. It took a lot of time. I was like, no, we can't use this language. No forks, no public-private key, very simple language. But again, the biggest question I get is, what's Bitcoin good for other than financial speculation? And I think the more that we have quantitative and qualitative evidence, right? Bring the receipts is what I like to say. The more that we have quantitative and qualitative evidence, the more it helps drive a smarter conversation about the future, rather than a conversation that's anchored in this very archaic way of thinking about money and boundaries and even regulation, right? The regulatory conversation is so constrained and so limited because of all of these preconceptions that people have.
Yeah, exactly. And again, I will just share the report, and then we'll see how people will react. And the other topic, which again I want to touch upon, because I think it's important. We've heard rumors that in January, finally, Libra project will be released. So this is a very controversial topic as well. So I'm curious, what do you think about it?
Yeah, Libra. It's now called DiEM, actually.
Yeah.
Rebrand, redo. Look, I testified in Congress about Libra in the summer of 2019. And one of the things I talked about a lot in my testimony that I'll just reiterate here, and anyone can read it. It's on the House Financial Services Committee page. Or if you just Google Meltem CoinShares testimony, you'll be able to find it.
I'll share it.
Yeah, I think it was 17 pages. I put a lot of data in there, which I think, again, always helpful.
So go further and differentiate between the consumer protection concerns with what Libra is and what a true cryptocurrency is.
My fundamental concern is related to stability. If we think about the various type of risk that investors take when they custody their assets or purchase financial products from an institution, we experienced this in the United States 10 years ago. You are taking inherent risk. When someone purchases a Libra, they're giving up their real world assets, they're giving up fiat, giving it to the Libra Association to receive tokens. These assets are placed in depository banks and institutions around the world. This is a core banking function. This presents risk from counterparties. It presents risk in consumers being able to retrieve the principal that they have used to obtain the Libra tokens, and it presents systemic risk in the context of the broader financial system.
And why are permissionless blockchains better for consumers?
When you buy Bitcoin, when somebody makes the decision to purchase Bitcoin, they are not buying a pool of assets. They are not exchanging their principal for financial instruments. They're buying what is essentially a digital commodity that is backed by its own scarcity and the demand for it. It is not a pooled fund. There are no assets or banks that have to create an instrument that backs the value of Bitcoin. This is fundamentally different.
The biggest point I want to make is this. Look, anyone can create anything and call it a cryptocurrency. We saw this in 2017. Same thing with internet companies, right? Like anyone can make a company and take it public in the late 1990s, early 2000s. So look, anyone can make anything and call it a cryptocurrency, but that doesn't make it so. In my view, and the reason, I'm not a Bitcoin maximalist, but I spend most of my time on Bitcoin because Bitcoin is unique in so many ways, right? There are things about it that are just so unique that cannot be replicated. And what I think is fundamentally different between something like Bitcoin and something like Libra, right? Libra is just an extension of the Facebook corporate umbrella, right? I call Facebook one of our digital oligarchs. We have a number of them. Libra is Facebook's attempt to draft off the narrative of Bitcoin in the attempt to implement something that is profitable and beneficial only to the Facebook corporation and its friends and allies.
Of course.
Right. And at the end of the day, there's a fundamental difference between a company developing its own code, custodying potentially billions or trillions of dollars of the public's money in its own bank accounts, and then giving people an IOU, right, in the form of a token and saying like, great, you can use this token, but only on our permission network, only on our infrastructure. And we have the ability to censor and control what can't be done with it. And when you want to cash in for actual dollars, you have to come back to us and we'll exchange it for you. And you just trust us. The reserves are there. That is the premise of Libra. It is, for all intents and purposes, a digital IOU. That's how payment networks have functioned for ages, right? So look, maybe putting, this digital token on a faster rail that isn't FedWire or the correspondent banking system provides marginal improvement, allows people to extend payments to populations that historically haven't been able to engage with payments, maybe, right? But at the end of the day, it is not different in form or in function. It is the same as what we have had. At the same time, I do think that Facebook embarking on this effort has opened the door to a broader conversation, right? And I think it has really highlighted why Bitcoin is so unique, and why something like Bitcoin is fundamentally different from something like Libra. Libra was the first, but it won't be the only one, right? PayPal is going to issue its own digital currency. Visa is going to issue its own digital currency. Every corporation wants to be a nation state.
Yeah,
right?
but ironically, PayPal was in their consortium and then they left, so. Exactly.
And PayPal, I am very, very, very confident that next year or two, they'll issue their own currency. Like, why wouldn't you?
Yeah, why wouldn't you?
Right? Historically, consumer finance companies have captured value at the end point, but if they can internalize the entire flow without having to go through the correspondent banking system, that's a huge opportunity, number one. Number two, it takes power away from these very powerful intermediaries. And at the end of the day, if you have the ability to transact, right, in your own currency and internalize so much of that value that's being created through that economic activity, like, fantastic. Why would I not do that?
Exactly.
And so again, I think what Libra has done is forced a conversation, and a very important one. Like, what do we want our future to look like? We started the journey, right, with governments, and our governments have proven that they just are absolutely, at least in the US, I feel like my government is absolutely incompetent, right? They are not fit to govern. And if this is the best we've got, like, I am not interested in participating in that system. We have corporations. I don't want to be a pawn. I don't want to be, digital serf as a, working and toiling on the click farm for Facebook or Amazon or Google, right? And removing these products from your life is incredibly difficult. So what's my other option, right?
Yeah, it's tough. By the way, Brock Pierce was running for president, so you could have voted for him. I mean, look, right now, yeah, we're in a very interesting times, where there's a lot like the fiscal policy, monetary policies, they're definitely like in a dire situation. And we see like, we don't even know, like a lot of Nobel Prize winners actually like predict that the crash is already happening. We're just not seeing it like, yet. So
it already happened. No, it
Yeah.
absolutely already happened. Look, the middle class doesn't exist anymore. It's been taxed to death, right? Yeah. I think Peter Turchin's idea of elite overproduction is a really interesting one, right? Like there's all over the world, I think what's happening is like this one unified narrative that used to exist has splintered into like individual, very different realities. And the internet and these like little echo chambers we've created have sort of accelerated that trend. But I think the current system we have is not sustainable.
Yeah. So coming back to the conversation with Libra, like, because we definitely know it's not sustainable, but the question is, like, you see, Facebook is the biggest publisher in the world, in the history of the world, like 2 billion people using it, like, as you've mentioned, digital oligarchs, so to speak. And how do we make sure that it's like we're not going to be replaced? It's like a Trojan horse, in a way, because we're seeing that they're trying to piggyback on the success of the community, but inside the community, obviously, most of the people, they don't support this idea just to do like, corporate finances and whatever, the exchange of value just in the rails of whoever it may be. By the way, like there's Starbucks, we're talking that they're going to launch their coin, like, Apple Pay, consider like, also why not? So it's fine, and maybe will actually help the adoption, right? But at the same time, how do you think we as a community have to, I wouldn't say strike back or like fight this battle, but to make sure that we're still like preserving the values that we're trying to like, build, the sovereign, like individual, like, the freedom, the ability to transact and to, to fight inflation, obviously.
And these are all conversations I have with myself on a daily basis, right? I'm like in the shower, I'm like, oh, monetary sovereignty. And it's ever evolving. Here's what I think is so delightful about Bitcoin. Bitcoin can mean many different things to many different people. There is no one person who speaks for Bitcoin. There's no one entity that represents Bitcoin. This is the beauty of this idea. And the way we sort of articulate that in the Bitcoin community is we say, we are all Satoshi. Right. So what I think is really interesting about Bitcoin, and the reason, we call it the Bitcoin rabbit hole, is you kind of start with Bitcoin. You're like, maybe it's interesting. You kind of scratch at it and maybe you go, 1 inch deep and you're like, oh, and you find some angle that appeals to you, and it's different for everyone, right? But as you start digging and digging, you start uncovering these layers, and you may start with money. You may start as an investor, just looking at alpha, right? Or diversification, or, risk reward of an allocation to Bitcoin. But as you start digging, Bitcoin reveals these layers of social philosophy. There's political philosophy. There's, tech philosophy. There's all these different aspects that are embodied within Bitcoin. It is in and of itself, there are variety of disciplines within Bitcoin itself that appeal to different people in different ways. And so, again, what I think will be interesting to observe, and maybe a good analogy here is what we've seen. I'll talk about 2 trends. So for most people, when they start engaging with Bitcoin, and really what we do at CoinShares in our investing business, we make it easy for people to get exposure to Bitcoin, right? When you first hear about Bitcoin, like you don't want to have a little ledger or you manage your private keys. You don't necessarily want all of the complexity that comes with, owning Bitcoin in the Bitcoin maximalist way. You're like, I just want some exposure to Bitcoin. So what do? You can go to your existing broker or bank, and you can buy our product, XBT Provider. It's a Bitcoin ETP, passive exposure, passive beta exposure to Bitcoin, Ethereum, Litecoin, Ripple, launching some new products. And there are a number of different providers. We have 1.8 billion in AUM, our highest AUM ever this month. It's a really easy way for people to get exposure to Bitcoin in a wrapper that looks, smells, feels, tastes like any other asset you might have in your portfolio. They do that. Great. Or maybe they go through Square or through PayPal, right? Really interesting fact, PayPal, in the 2 weeks since it launched their cryptocurrency capabilities within their US app, over 1/5 of their customer base has interacted with cryptocurrency in some way. And typically with the behavior we see is people will go through one of these platforms, they'll get a little bit of exposure, but when they're on these platforms, they can't interact with anything else in the crypto sphere. They're in this walled garden, and really what they have is synthetic Bitcoin, right? Where they get the price exposure, which is great, right? Most people start with price, but then they're like, wait a minute, I want to try this cool Sphinx app that Meltem talked about. How do I send, $10 Bitcoin? Oh, you can't transfer Bitcoin out of that environment. So then very quickly, they start to look at other alternatives and other options. One interesting trend we've seen that reflects that, right? And this is at the consumer level, but also with large allocators, right? Family offices, they'll start with exposure to a Bitcoin structured product. They're like, wait a minute, as I learn more about Bitcoin, one of the core value propositions of Bitcoin is preserving value outside of the correspondent banking system. So what do? I need to figure out how to self-custody Bitcoin, or I need to figure out a way to custody it offshore, right? And so what we start to see then is in the last 2 years, right now, Bitcoin the amount of Bitcoin on exchanges is at the lowest point it's been in the last 2 years, because people are taking their Bitcoin off of exchanges. They're withdrawing their Bitcoin from these financial intermediaries and finding different ways to hold it. I'm an investor in a company called Carse that has a multi-sig solution that makes it really easy for you to hold your Bitcoin in a secure way. Like, I call it like a safe, it's my Bitcoin vault, right? It's my numbered Swiss bank account, but it holds Bitcoin. And so I think this is just really, it speaks to the fact that change takes a long time. We've introduced something that's functionally so different from everything else that's existed before that it just takes time, I think, and experience for people to interact with the products, to interact with Bitcoin itself. And then as they move through that learning curve, but also as the applications and products mature, right? And again, 250 companies, I'm investing in this. Like at CoinShares, we invest in this. We have a trading business, custody business in Jersey. I do this with my own capital. I've done this with a lot of different investors. Like, we are building the infrastructure as we go. And as the products and services get better, like today, Bitcoin is still 99% more difficult to use than all other fintech applications out there. Like, it's not that easy yet, but every day it gets better and better and better. And there are tons of really smart people, really motivated people who are building really good stuff. And so, I think it's just a function of time. Like, change just doesn't happen so quickly. And then it sparks ideas, right? As people start interacting with Bitcoin, like someone like Michael Saylor, right? He went from, nobody had ever heard of Michael Saylor really in the Bitcoin space. And then within a span of like 2 weeks, he was radicalized, which I think is amazing. And it's really the power of like memes to spread reality. If you listen to the way Paul Tudor Jones or Stanley Druckenmiller, two investing just legends are talking about Bitcoin, they're using narratives that were created by the Bitcoin community. Yeah. And so I think, again, as people start to get exposure, they start to think and they're like, this actually makes sense. Sorry, I hope that answered the question.
No,
I get excited. I get so excited. I have to bring it back down.
Listen, you're such a polymath and the brilliant mind. So I didn't mind you going to the route where your brain leads you. So let's touch a little bit also another popular topic, which is on a different spectrum, which is DeFi, right? Because I know that there are people of course Bitcoin is right now is equivalent to digital gold, and a lot of DeFi projects, they're still amazing, and there's a new craze, FOMO of the DeFi yield, and people accruing 60, 100% per annum, like crazy numbers. And it's still very young, and there are a lot of again, we see hacks, we see different stories, but it's very attractive. And it's a broad question, but I want to hear your one of your top picks. What do you consider in DeFi that attracts you personally? I know you've met some allocations and you're generally excited about the topic, but how would you even explain DeFi to non-crypto people?
This topic is such a fun one, and as you've just outlined, it is a very big topic. Let's start with the basics, okay? all of the financial services industry is centered around two fundamental activities: securitization and leverage, right? So one of the interesting things, like when I first started interacting with Bitcoin, and I started my career trading commodities, and then I moved into corporate finance where I traded overnight rates. And I worked in M&A and, but always in sort of finance functions. When I first interacted with Bitcoin, what blew my mind is that I could interact with Bitcoin without ever talking to a financial intermediary. So if you and I, Constantine, wanted to transact value or exchange value, I don't need to know your name. I don't need to know your address. I don't need to know where you live. I don't need to know your bank. I don't need to know your bank account number. I don't need to know anything about you. The only thing I need is a public wallet address. And it doesn't matter if I'm using Coinbase and you're using, Kraken. It doesn't matter if I'm using my own wallet and you're using a different solution. It literally does not matter. I can send Bitcoin from anywhere to anyone at any time without requiring approval, permission. That was mind-blowing. Just mind-blowing, right? Previously, the only way you could do that is giving someone physical cash. But now I could literally do that on the internet. That was wild. And then what Ethereum did, and actually what's interesting, Bitcoin did tokenization first, but there was so much strife about like competing standards for colored coins, which were basically ways to attach metadata to really small amounts of Bitcoin, like Bitcoin Dust. They're called colored coins. It kind of fell apart. But when Ethereum came out, like one of the really interesting things that Ethereum did is they enabled securitization using Ethereum as a protocol. So all of a sudden, you can take all of these different assets and create synthetic assets and representations of assets, and you can securitize them. And basically what happens when something is on the Ethereum network, similar to what I just described with Bitcoin, I can trade anything with anyone, anywhere, clear, settle, margin, how I want, because we're on the same network. And so we figured out the securitization bit. It's only inevitable that the next piece was leverage. So if we look at the traditional structure of the crypto market, right, historically, the biggest constraint to crypto markets has been access to capital. If we think about how traditional markets function, right, like leverage is the fuel that drives markets. And if you're a trader, if you're a financier, there are different ways of obtaining leverage. But typically, you could go to your PB and get leverage, or you could trade on margin. You can create a lot of capital efficiency through offsetting positions. In the Bitcoin world, that didn't exist, right? You were trading like spot Bitcoin. Then in 2017, 2018, we started to see futures and options space, derivative space grow. We're going to do 10 trillion in derivatives volume this year, which is like nutty because last year it was about 3 trillion, right? And that space is going to continue to grow. But really, leverage was inaccessible for a very long time. In 2017, the team I worked with at the time, we created really the first institutional way for people to get leverage on their Bitcoin, right? So asset-backed lending against Bitcoin. So this whole asset-backed lending market has grown. We just hosted an event called the Crypto Credit Summit, where we talked about this market, 20 billion in collateral, generating 100 million of quarterly interest, right? It's a big market. But then if you could take these two ideas and connect them, securitization on Ethereum, so anything can now become collateral, and the need for leverage, right? Anyone can now create sort of this ability for people to take securitized assets they have, deposit them on chain and obtain leverage. And you can now distribute that interest instead of going to one institutional entity, right? That interest can be distributed to a pool of people who contribute capital that's available for trade leverage or whatever other, and it's mostly trade leverage, to be honest, right? All of a sudden, leverage entering the crypto sphere in a crypto native way, right? Where we're actually escrowing our assets and giving up control of our assets and putting them into the smart contract. It has fundamentally changed the game. And so to me, DeFi is the next extension of where securitization and leverage is going to go. And again, like at the end of the day, what people are looking for, number one, is access to capital at the lowest rates possible. Right? Historically, the only way I could access capital in crypto, right? My rate was the rate of equity, which is 20 to 40%. So the dilution I'm taking for raising capital, hard to access, very liquid. Now there's an RD, a rate of debt, right? And the rate of debt to access cash is anywhere from 8 to 12% with Bitcoin, and it varies on the asset. And all of a sudden, what we're seeing, right, is my WACC, my weighted average cost of capital, has come down significantly because of the introduction of a new debt market. It's like I'm talking in very traditional financial terms because I think people get very carried away with like the DeFi narrative. No, all we're talking about is securitization. Anything and everything that has value will be collateralized, right? I always joke with our trading desk, like I want to collateralize my reputation and put it on the blockchain and obtain leverage against it. But anything, my Beanie Baby, I'm going to collateralize this and turn into leverage. There are people actually working on collateralizing real world assets on blockchains. And so anything that can be collateral will be collateral. We ourselves created a digital gold token, right? It's Swiss vaulted gold that you can use as collateral in DeFi now. It's called WDGLD, wrapped digital gold. It's super cool. So you now have assets that are able to be used as collateral, and it's not just with your bank, right? Like typically I owned a gold bar and I custody my gold bar with, let's say, BNY Mellon. The only place I could get leverage was BNY Mellon. If I have a digital gold bar, right, a digitally securitized gold bar, I can use it anywhere on the Ethereum network, anywhere within this ecosystem is now usable. So effectively what we're doing is we are removing the constraint that assets have historically had where they've been bound to the venues on which they trade. It's so cool. Like it's so cool.
No,
I
think you just provided one of the most eloquent and beautiful like explanation of how DeFi works in traditional terms. So that's why I wanted to to go deeper into your brain and then get this valuable like information, because essentially like I think we when we go to the I would say more techie explanation of DeFi, we lose the people. Like they don't get it. Like it's too complex. Even for me, I tried recently to buy some of the Aave and syntaxes, even though I know like the folks who created it was not that easy. Like I had like 3-4 layers of like steps, go into MetaMask, go in and out. So but at the same time, I think on a simple level that we can attest right now that look, in your, like you've mentioned, trust, there's trust token, a stablecoin, there's USDC, USDT, and you can literally have like 12 to 50% yield, like sometimes, annualized. Like not a single bank in the world will provide you that right now.
Right.
Like,
but look, those yields only exist. I want to, again, like using my investor brain here, there's risk reward calculus you have to do here.
Sure.
From a risk perspective, right? Let's talk about what you're actually doing. For example, let's say you have digital dollars, right? Pick your favorite digital dollar. The dollars are custody in a bank account. You get issued a digital dollar. Maybe it's a DAI, right? Which actually is synthetic dollars created by collateral, which is super cool. And now there's really cool algorithmic dollars, like empty set dollars, a project I've been spending a lot of time on. It's like very, very cool, creating an algorithmic decentralized central bank, like so cool. Anyways, but look, there's a risk reward trade-off, right? These things have a lot of risk. We've seen numerous contracts blow up. And the complexity you described, what I think is so interesting, right, is like engineers are now discovering finance. And I've always long held that financial engineering is the best type of engineering. Super fun. But engineers are now discovering finance and structured products and securitization and leverage, and they're starting to build with it because we now have these little building blocks in the form of crypto primitives, right, that allow us to do all of these different things. We have protocols for securitizing, we have protocols for leverage, we have protocols for creating liquidity pools, but you are taking risk. If you see, this like in the real world, if the reward is really high, it means you're taking a lot of risk. And I think one of the challenges I have is, you need to understand that you are taking risk, and the loss in some cases is permanent, right? There's also impermanent loss, right, that results from drastic price volatility in some of these assets. So I think, again, what I sort of caution people on is like, you need to understand risk and reward, because at the end of the day, you're taking on a lot of risk. And over time, as more capital flows into the space, right now, people are willing to pay a lot of money to access capital. And anyone can access this capital, which is so cool. But over time, as there's more liquidity in the system, over time, as there's more capital available, right? Inevitably, as assets flow from the legacy world into the crypto world and seek yield, margins will compress, right? net interest margin will come down. And so again, I think this is sort of a short-term opportunity that's really the result of this new market being created, this new market around securitization and leverage and bringing these pieces together in this like distributed sort of completely digital way that doesn't require a bank account. So cool. But at the same time, as that grows, right, inevitably institutions are coming in. Like we've been experimenting with some really interesting stuff in this space. Institutional yield farming is a thing, right? I always say, you know, I'm on the hunt for margin and I will find your margin and I will destroy it. So look, over time, this will start to normalize, and it may not look like what traditional rates look like. The last piece I'll say though is if you want exposure to high yields, another area that we should not ignore is the asset-backed lending space and Bitcoin mining. It's a really interesting space. It's basically equipment leasing where people are buying GPUs and ASICs, right? So we didn't talk about semiconductors, but it's impossible to get an RTX 3090 right now, which is a new GPU from NVIDIA. It's super powerful. Impossible. It's impossible to get latest generation ASICs. Right now, ASICs, which are the specialized semiconductors, specialized chips that are used in Bitcoin mining specifically, ASICs in the secondary market are trading at a premium to ASICs in the primary market. Because in the primary market, what's happened is firms have arranged with suppliers of these chips, right? And there's only 4 major firms, and really 2 that produce ASICs. And they've contracted all forward supply of ASICs.
Yeah.
And they are now leasing them out to people who want to mine at 20 to 25% a year.
Yeah, and then they go old and then they do it again next year. Yes.
Exactly. So there's this really fascinating market, and we spend a lot of time on Bitcoin mining. We've written a bunch of reports on it. But there is this really interesting relationship with hardware and software, right? I worked in the energy industry and I actually spent time building like pipelines, refining facilities, gathering processing facilities. Like there are physical things that need to be built, like high CapEx components of creating this digital world, right? Like look at Equinix, right? Data center REIT, huge company. These digital worlds have physical instantiations. And I think the one piece everyone's ignoring is the physical instantiation of this stuff is going to be a huge industry, already is a huge industry. And there's going to be a lot of money that gets made there. So I would urge your listeners to look into asset-backed lending in the crypto space. If anyone's interested in learning more, feel free to contact me. I've written a few reports on it. If you like Miller Modigliani 63, we get into that.
I'll put it like, yes. Yeah, Twitter. Like I know you're big on Twitter, and you're replying sometimes even to your direct messages. So if someone is willing to contact Meltem, please do so. I will put it in the link.
Feel free.
Yeah, and the last I know, like I would love to have a separate maybe video, maybe later when about your report and about the asset-backed lending. I think it's a fascinating topic. It just like it requires a separate focus, like to go over it. Last thing, like is our first interview. Like I want to ask you like you philosophical question, like a very simple one. Again, like what's the meaning of life to you?
The meaning of life. I think the meaning of life for me, at least, is to come to grips with the fact that your brain and your consciousness is infinite, but is trapped in a illusion of being finite and limited. And I think we get so attached to like these ideas we have about reality. And I think about Baudelaire's simulacra and simulation, right? So our perception of reality and how it gets constructed. And to me, the meaning of life is like really the only thing that we can know for certain exists is our own mind, right? I can't be certain that anything else exists other than my own mind, what I'm experiencing, what I'm feeling, etc. And so knowing that, the question is like, what do you want to spend your time and energy on? And so for me, it's like, I want to have fun, right? It's being in a constant state of play. And like this book, Finite and Infinite Games by James Carse, I reread this often, like it's dog-eared. A lot of people get trapped in playing finite games, but there is a larger infinite game. And if you're constantly in a state of play, you get to experience that. And so I think the meaning of life is, how do you create a mindset for yourself where you can be in a state of play? And for me, like, part of it is this industry. It's so fun, and it's so intellectually interesting reading sci-fi, right? Like time traveling, imagining different states of reality. And then, spending time on experiences and being immersed in experiences with people you love that are meaningful to you. I don't know. What do you think, Konstantin?
Listen, my answer will be also long. It's to me, it's always the search of meaning. Like it's as you mentioned, we have a subjective perception of reality, and it's predicated by our five senses, and we don't know what's outside there. It's still a big question for me. It's always like the ontological seeking of the understanding of what is consciousness, what the hell is that, like, where it's coming from, where is the control trigger, like, what's the choice, and all of those questions that I believe, like, you ask yourself when you're in this life and death situation. So yeah, I think, somewhere, I hate to use this cheesy word like harmony, but somewhere in between the search of the meaning and the true harmony with yourself and with your closest environment. That's how I would probably define it briefly, right? Mm-hmm. And then obviously we require a separate conversation, but I know I don't want to, I want to keep it short. So you're also big in sci-fi. So instead of asking you like, what is your favorite books? Actually, what I'm going to do, I'm just going to put like your website, personal website, Meltem Demirors.
I actually don't read books anymore. Like, management books are trash. Most management books are blog posts that have been extended into books. So like, save yourself the time and read like the blog post form. The only things I read are like textbooks. Right now I'm, refreshing security engineering. This is about building secure distributed systems. And then, I read a lot of sci-fi, I think, and then history books. I think history is really important to understand.
Yeah. So yeah, I mean, I'm going to show you have a list that, on your website. List. Yep. Exactly. I'm going to share this, like, like Asimov, like, there's a lot of great books out there. So we're just going to, people, if you want to delve more into your preference, they can go there.
Yeah. And send me your recommendations. People like DM me cool recommendations all the time. I just received a really rare book that's been out of print for a while from someone. That was fire. So if you have recommendations, send them my way. I update my list once a year. So I actually have it on my to-do list.
Oh, sure. I'm happy. So because every episode I actually ask every person what's their favorite book. And that's obviously a trigger for me to read it. So so I have every
sci-fi book ever. I don't discriminate. Like, some are of questionable quality, but look, I'll just end on this note, right? Sci-fi and fiction writing, but particularly sci-fi, right? What we believe the future will be does dictate what we build, right? And like, people always say like, oh, sci-fi is prescient. Well, no, it's not. Sci-fi is just an articulation of what might be possible in the future based on what we understand and know today. And the interesting thing, right, like, human knowledge is cumulative, but the challenge of history is so much human knowledge has not been preserved and transmitted. The only way we've been able to preserve and transmit knowledge for millennia has been through memes, and particularly religion, right? Like, religion has dominated the meme for the mimetic transmission for the last 3,000 years. Yeah. We're just starting to move out of that phase, right? And the question is, like, because we can now preserve and transmit information over long periods of time, hopefully, and over long distances instantaneously, right? And without censorship, right? Like, the reason history reads the way it does is because of censorship. People rewrote history to reflect their reality and their desires for the future. So it introduced a really interesting new construct of like, what will be possible in the future, because we now have this ability to enable mimetic transition outside of this like highly censored, highly structured system. it's super cool. If anyone wants to nerd out on that, I would love to.
Yeah, no, like this is my favorite topic. Maybe we meet once in New York somewhere, like, during the coffee and talk about it, because it can be like it can be hours to have this particular discussion. But I'm excited that that what you do, like, why I was excited about this interview, honestly, because not only you have an amazing capacity to distill complicated tech notions and like financial terms, and to make it more like digestible, but you also have this I would say educated approach to history, to like psychology, and like you combine all those like disciplines, so it's multidisciplinary approach, which is pretty rare, if we be honest, in our industry. Some folks are very like they're one-sided, they're either technological, financial, or they're like more like behavior psychology. So
we are all fractals though, so like you got to embrace it all, right?
Yeah, well, also to embrace it all and to be able to articulate it in such a clear ways that you do it, like, and it's also a talent. I should say that, like, so I really appreciate
that.
it.
I feel like I'm rambling, so hopefully this hasn't been too rambly. Hopefully, I try to keep it succinct. Like I write little notes sometimes to keep myself on track.
No, I think you're amazing, and again, I hope that you're one of those, like, in Joe Rogan experience, that they have like one of those favorite guests that you're gonna invite them more and more, like, so the second, third episode. So you're definitely one of them. So I'll be delighted to have you more on the shows once you release, the new report, so we can go over it, like, and practically like educate folks, what are the use cases, what is the adoption, and
for investors who are listening, if you're just curious about how Bitcoin fits into an investment portfolio, www.coinshares.com. We've written a lot of great research around Bitcoin in a portfolio, optimal allocations, diversification, impact on sort of your portfolio's performance. So recommend you to go check it out, give us feedback on what you want to hear about. We're about to publish a piece on differing valuation methodologies for Bitcoin. So yeah, we're always writing, thinking, trying to make sense, right? So.
Yeah, no, I encourage people to learn more about you, but because I think in both DCG Group and in the CoinShares, you did a great job educating investors, and I think that's very important. Like, besides just providing them yield or like returns, they need to understand what they're doing and where the industry is going. So that I also appreciate. Thank you so much, Meltem. I know that you have to go already. So.
I do. I have to go refresh before we do this all over again.
Yes.
So thank you, Konstantin, for having me. Again, as Konstantin said, if anyone is curious, wants to chat more, at @melt_dem on Twitter. My DMs are open, would love to chat. Anything and everything is fair game. And then interesting sci-fi books are always welcome. Thanks so much, Konstantin.
Thank you.